Hello everyone. We will be starting question 6 to 10 for CBSE class 12 accountancy sample paper. So the sixth question I'm going to start and I'll be providing a solution step by step for that. So guys, please follow this channel for more material for accountancy for class 12. Okay. So the first question is question number 6. Jay and Viru were partners in a firm sharing profit and losses in 5:3. Their capitals were 10 lakh and 8 lakh. Okay. The firm has reserves of 7 lakh. That normal rate of returns 10% and average profit for the company is given. After the adjustments of loss of machinery of book value 2 lakh by fire against insurance claim of 1,50,000. So you need to calculate the value of goodwill as per capitalization of super profit. Now see, the first thing you should know is your formula. What is your formula for goodwill by capitalizing super profit? So this is your formula. Your formula is super profit upon normal rate of return into 100. Now for this, you don't have a super profit with you, right? So next thing is, what is formula for super profit? Super profit is average minus normal profit, right? So now average profit they have given you in question, which is 2,30,000. Okay, so average profit they have given in question, that is 2,30,000. Okay, but for that they have given adjustment that like you have a loss from machinery which is 2 lakh, the fire cost, and you got insurance claim for 1,50,000. So for average also you have some adjustment. What is that adjustment? Your given profit plus abnormal loss. Now your profit given is 2 lakh 30, but abnormal loss is your loss was 2 lakh, but you got 1,50,000 claim. So this 2 lakh 30 plus 50,000, total your average profit is 2 lakhs. Okay. Now we come upon normal profit. The normal profit is total capital employed into normal rate of returns, right? So your normal profit will be your capital employed into your returns. So your capital employed, they have given in question the capital of partners, right? So these are the capital of partners plus reserve. Combination or addition of all those will make your total capital employed. So capitals of both the partners are 10 lakh, 8 lakh, and your reserves is 7 lakh. So total you have 25 lakh capital employed, right? So your normal profit now, it's 25 lakh into 10 upon 100, which is 2,50,000. So now again you will come back here where you want normal profit, you will mention 2,50,000. So 2,80,000 minus 2,50,000 is how much? 30,000. Okay, this 30,000 you're going to put it in the super profit place in your formula. 30,000 upon 10 into 100. So your answer here, it will be 3 lakh. So your goodwill by capitalizing super profit will be 3 lakh. I hope this is clear for you guys. I'll go on next question now. Next question is seventh question. On 1st August 24, Tom, Jerry and Tyke entered into partnership with capitals of 5 lakh each. Interest on drawing is 6%. And he withdrew 80,000. So what will be the interest on drawing charged? Okay. Now, first of all, what is your interest on drawing formula? Your interest on drawing formula is your amount of drawing, whatever amount you have withdrawn, say 80,000, right? Into rate of interest into period upon 12. Period means how many months he has taken the amount for his personal use. So your drawings are 80,000. Okay, your interest rate, it has been given here, how much? 6%. So interest rate, we are going to take here 6% into months period. So he withdrew the amount on 1st August. So August from March, see, from August 24 to March 25. So August, September, October, November, December, January, February, March. So total 8 months. Okay, so if you cut this two zeros, this one and this one, you have 800 into 6 into 8 upon 12. Now 6 tables, 6 ones are 6, 6 twos are 12. So it will be, your 8 will come as it is and 2. Then again 2 ones are 2, 2 fours are 8, 8 fours are 32. So your answer is 3 C, that is 3,200. question number 7. I hope everyone is clear on this. So I'll go on. Next question. Okay. Now, next question is question number 8. You have two questions here. So first one we will see ABC were partners in firm with profits 7 profits or loss 7 is to 2 is to 1. B died. A took over 1 upon 20 off from his share and remaining was taken over by C. So determine the new profit sharing ratio. Okay. Now in this case, what are your partners profit ratio? ABC 7 is to 2 is to 1. So 7 upon 10, 2 upon 10, 1 upon 10. Now B died, okay, and his share was taken over by A and remaining by C. So B died. So his share was what? 2 upon 10. Now because it's going to both the partners, I just wanted to make it denominator. I multiplied it by 2 because I want to divide among two people. So 2 twos are 4 and 10 twos are 20. So 4 upon 20. Because here it was 20, here it was 20. I made my denominator here also 20. Okay. So A took 1 upon 20. So how much will remain for C? 4 minus 1. How much? 3 upon 20. So what will be A's new share now? Old was how much? 7 upon 10, which is this. And A took how much? 1 upon 20. Okay. Now again to make the denominator common for this, I want to make the denominator common, right? So 10 into 2, 7 into 2 plus 1 upon 20. So my denominator is 20, 20 now. 20 and 20. So 14 plus 1 is 15 upon 20. Now C. If we see for C, C's old share was 1 upon 10, which I wrote here, and gain is 3 upon 20. So again, I want to make the denominator common here. So I multiplied by 2 into 2 into 2 plus 3 upon 20, right? So my answer came 2, 2 upon 20 plus 3 upon 20, which is 5 upon 20. So if I see new ratio, this guy is 15 and this guy is 5. So 15 and 5. So 5 ones are 5 and 5 threes are 15. So my answer is D, 3 is to 1. Okay. Now we have second one. In second question, what they are telling? Let us see second question. Okay. So we are on question number 8B now. And see here, XYZ are partners in firm sharing profit and losses in ratio 5 is to 3 is to 2. Y retired and he gave his share, half of his share to X and remaining half to both of them, X and Z equally. So you have to determine the new profit sharing ratio. Okay. Now see, in this case, you were having these three partners. Okay. In which Y has died. Now Y share is how much? 3 upon 10. He gave half of his share 3 upon 10 into half, that is 3 upon 20 to X and remaining to X and Z. So remaining 3 upon 20, half he gave to X and half he gave to Z. So if you see now X new share, it will be his old, which is 5 upon 10 plus 3 upon 20 and plus 3 upon 40. So if you make the denominators common for all of them, 10 you can make 40 by multiply by 4, 20 you can make 40 by multiply by 2, and here already you have 40. So in this way, if you add, you will get 29 upon 40. And Z's new share will be 2 upon 10, and here he got how much? 3 upon 40, right? So 2 upon 10, again I'll multiply by 4, so I can make my denominator 40, and my answer will be 11 upon 40. So 29 from here and 11 from here. So 29 is to 11. So my answer is A. Okay. Next question is question number 9. Okay, X, a partner, was assigned to look after dissolution process and was allowed remuneration of 15,000. Okay, now X was told by the company that he will do all the dissolution expenses and he will get 15,000. But actual realization expense became 20,000 and it was paid by another partner Y. So by what amount realization account will be debited? See, realization account will be debited on what firm agreed with the partner. What firm agreed? They agreed with X that we will pay you 15,000. So your answer will be 15,000. You don't have to think too much on it. Okay. Now, 10th question. See, Arun and Barun were partners in firm. They're having profit and losses 3:2. They admitted Charan into partnership firm for 20% share. He was to bring proportionate capital and he brought 3,50,000 capital, in which 50,000 was goodwill. Now, if the adjusted capitals of Arun after revaluation is done, he got 8,40,000. What will be Barun's capital after revaluation? Okay. So in this case, now if we see Arun and Barun, their ratio is this. Okay. Then he is admitted for 20% share. So 20 upon 100 is nothing but 1 upon 5. Now C brought capital. How much? How much capital he has brought? 3,50,000 including goodwill 50,000. So what is his capital actually? It will be 3,50,000 minus 50,000, which is 3 lakh. Okay. Capital of firm, you can do the reciprocal of C into reciprocal of the share. So 3 lakh into 5 upon 1, that is 15 lakh. Okay, so what will be Barun's capital? It will be total capital minus C's capital minus Arun's capital. This is Arun's, not Barun's. Okay, so this is 15,000 total capital. Then C's capital is 3 lakh. Okay, and here already Arun's capital 8,40,000 is given. So Barun's capital will be 3,60,000. So your answer is B. Okay, the next thing is Raghav and Sahil were partners in firm sharing profits and losses in 5:3. Their capital balances were 7,20,000 and 2,80,000. Okay, they were having general reserve and deferred revenue expenditure in their books, which are these. They admitted Ojeswar into partnership firm for 20% of share, and for which he brought 4 lakh as his capital. Determine the goodwill of Ojeswar. Okay, so to start with this, see the partners' profit sharing ratio is 5:3, right? And their capitals were 7,20,000 and 2,80,000. Okay, so what I did, I mentioned the capitals here for both the partners 7,20,000 and 2,80,000. Okay, the balances of general reserve were 5 lakh. Now, see, general reserve is 5 lakh. I divided among profit sharing ratio of partners for Raghav and Sahil. I got 3,12,500, 1,87,500. Okay, so general reserve is normally given to partners, so I added it to this working here, general reserve. Then we have deferred revenue expenditure. It's a loss, 4 lakh. So that also I divided in old ratio among partners. I got 2,50,000, 1,50,000. That I subtracted from this. Okay, so why I'm doing this is I want to find their actual capitals here. Okay, after doing this adjustment. So see, for Raghav, I got 7,82,500 and Sahil 3,17,500. So total my capital for both of them is 11 lakh. And the new partner whose 20% share is there. Okay, so his share will be 1 upon 5. Then what will be share of the old partners? It will be 1 minus 1 upon 5, that is 4 upon 5. So if I find a capital of firm is capital of uh, Ojesov into reciprocal of his share. So capital of firm is 20 lakhs. So if I want to find the hidden goodwill in this working, hidden goodwill is actual capital of firm minus capital of the old partners minus capital of new partner. So we just found capital of firm, which is 20 lakhs, capital of old partners, which is here, that is 11 lakh, and capital of the new partner is 4 lakh, which we know it's given in question. So hidden goodwill is 5 lakh. But in the question, they are asking Ojes's share of goodwill. So 5 lakh into 1 upon 5, that is 1 lakh. Okay, so the answer is B, 1 lakh. I hope you understood question 6 to 10. We will be solving more questions together. So please follow me, like and subscribe. Thank you so much.